Hello, thank you for joining our workshop today on taxes in the U.S. During this presentation, we're going to learn about the tax system in the U.S., how taxes are collected for both payroll employees and people that are self-employed. We're going to learn how to plan for your taxes, paying your taxes throughout the year, and how to file your tax return at the end of the year, the beginning of next year. And we're also going to learn about tax benefits and some credits that you and your families might be eligible for. So let's talk about taxes. What are taxes? So taxes are money that is paid to the government to help pay for different government services, goods, and costs that they end up covering. So you end up paying taxes. You might pay taxes to the federal government, to the state, and even to your city or local government. The taxes are monitored on a federal level by the Internal Revenue Service, or the IRS. So why is it important to pay taxes? So the first thing to really think about is this tax money, or the money that's paid by people throughout the U.S., goes to finance government programs at the federal or national level, at the state, and at your local level. So there are a lot of things that you might not know about that your taxes actually go to pay for, such as these common resources, which we'll talk about in a bit. Another thing to think about for your taxes is, it's meant to support these things that we all share together as a community, and it is a way to have your input into community matters. Lastly, immigration applications. Taxes are an important consideration to make if you are going to be applying for an immigration status or a status change, because when you file some immigration applications, they're going to ask to see records of your federal tax returns. So to avoid any stops or pauses in that process, it's good to pay those taxes and have that record. So what do taxes pay for? So taxes pay for a lot of things, and it also depends where you're at. So that's the first thing to recognize, that every state and city, they have a different way of breaking up their tax dollars. You might hear sometimes on the news when your city is coming out with a new budget, and you can check that out and see what the tax money is going to pay for. But generally, these are some of the common things that this money goes towards. So public libraries, parks, roads, repairing the roads, keeping them drivable, your fire department, maybe your local police force, other programs like Medicaid and Medicare, benefits for veterans, education. Most of the public school system funded through tax dollars, the military, public benefits, and other federal programs. So, another thing to add to this is all your state and local representatives, your federal politicians and representatives, they're all paid, their salaries are paid through tax dollars. So there are a few different types of taxes. The big one that most people think about is income tax. So income tax comes from your income. So the income you're earning, they'll remove some of the taxes from that to go and pay towards these government programs. So if you're a payroll employee, we'll talk a little bit about how they take that out, but usually it'll come right out of your paycheck. And if you're a business owner or a contractor, then generally you're reporting your taxes yourself, keeping track, and paying those, making the effort to pay those independently to the IRS yourself. Then there's Social Security tax, which funds the Social Security programs, which are for as you get older and you want to retire. That's what Social Security tax goes to. Or if you're disabled or blind, there are programs that Social Security pays for that. Medicare tax for insurance as you get older as well, medical insurance. Property tax if you own any property like land. In some states, your car might be, you might have to pay property tax on your car. And then there's the one that is most common, you see day to day, sales tax or consumption tax. So when you buy something and there's that tax added to it, that's another way that they collect taxes. So as we noted earlier, your taxes, it differs based on the state you're in, based on the city you're in, the county. Most of the time, your taxes and what you're going to owe in taxes is calculated based on a few factors: your income, how much you're making. There's different tax rates based on the range of income you make, and also your family size. And they also look at things as, things that you're spending on, like deductions and special credits and programs you might be eligible for. But it's important to remember that what you pay in taxes is really individual or based on your family. You want to they'll look at what your family looks like, what your income is, and then calculate based on that. So how are taxes collected? So as we mentioned earlier, you're paying throughout the year, right? If you're buying something, you're paying taxes generally. When you get paid by your job, you're paying taxes. So you're paying throughout the year. So there's that piece, but then there's the piece at filing your taxes or submitting your tax return, which you might hear a lot of people talk about, which happens at the end of the year, or the beginning of the following year. So for example, for 2022, you would file your tax return starting in January of 2023. The biggest thing to remember is, you can make it easy for yourself, right? So if you're paying your taxes throughout the year, makes it easier so that you don't end up owing any money to the government later. And hopefully you get a little money back if you're keeping track and being organized with everything. So just to break down a little bit further, so for federal income tax, for Social Security tax, Medicare, state income taxes, all of that is taken out generally either through your paycheck, or if you're self-employed, we'll talk about how to report those taxes throughout the year, but generally it's coming directly out of your income and things. So throughout the year, you're able to pay that off. Property tax is a little bit different. In some places, they'll collect them twice a year, paid to the county. So some homeowners choose to include these funds in their property taxes like throughout the year. Really depends on the situation. And then lastly, you're paying your sales tax all the time, anytime you buy something. So who needs to file their taxes at the beginning of next year? So the first thing is, if you have income, taxable income, above $12,550, then you have to file taxes. If you make under that, you're not required to, but it doesn't hurt. You never know. You might end up getting some refunds or some credits and actually get a little bit of money back. If you're self-employed and your income's at least $400, and self-employed also includes if you're working like gig jobs like DoorDash or Uber or Lyft or Amazon Fresh, whatever other jobs you're working, and you make at least $400, you should also be filing your taxes at the end of the year. Another note is that the IRS recommends reporting all cash income. So let's say you're working for cash, you're working a job as maybe like for example, if you're in construction or landscaping, or working at a restaurant and they pay you cash, then you're going to have to do that extra legwork, keep track of the income you're making, put the money aside so that you can pay taxes at the end of the year. So a note on that too, obviously working cash is a little bit more work for you when it comes to taxes. So, it's up to you on what your preference is there. And like we said, you're not always required to file your taxes, but it doesn't hurt if you want to see if you might be eligible for some other refunds or credits. So just quickly, what is taxable income? Because we just mentioned it on the last slide. So most income is taxable. So, the money you earn from work, the money you earn from your business is taxable. The money you get from unemployment is taxable. There's only a few that are not taxable income. So examples are child support. That's not taxable. Public benefits, so if you get cash assistance from the government or getting financial assistance from an organization, that is not taxable. And then another example is a gift. So if a gift is less than $10,000, then that's also not taxable. It'd be great to get. I would love to get a gift of more than 10,000, that would be awesome, but not taxable if it's under $10,000. So, just to keep in mind that most of the income you're probably earning is you want to keep track of for taxes. So what happens if you don't file your taxes or pay your taxes? So there are penalties and fines. There could be penalties, like a penalty such as holding back the money from your wages, freezing your bank accounts. Technically it could be considered a crime over time if you don't pay your taxes. So, you're going to want to make sure to pay them and keep track of that. So you can get penalties and fines for not filing, for not filing at the end of the year, for not paying at all, for paying late. So there is a time period when you have to file your taxes, and we'll go over that in a little bit. And so if you don't think you're going to make that time period, you want to file for an extension, and then you can have more time. But really, you want to try to pay. You get a few months. So don't wait till the last minute to end up filing your taxes. So like we said, some of the penalties and fines, they could take it out of your paycheck. They could take it straight from your bank account. They can freeze your bank account. And like we mentioned earlier is, if they see you might have been earning income and you didn't file your taxes on when you're doing the immigration application, could be they're going to probably ask you to go back and do that and fix it. And so it's a bit annoying to have you go back and have to pay taxes that you might have owed from a few years ago. You don't really want to have to go back and do that. So now let's talk about paying taxes throughout the year. So there's a few vocab words that you might hear when you're talking about paying your taxes throughout the year. There's your filing status. And your filing status is basically how you choose to file your taxes. So are you filing it as a single person, just by yourself? Are you filing for married? Are you married with a family? Then maybe you would do it married filing jointly. If your income is for the whole household. There's also married filing separately. So let's say you're married, but you and your partner or spouse prefer to file separately. Maybe you don't share all your assets, or you guys cover things separately. And then there's head of household. So oftentimes this is for parents or people with dependents, which we'll talk about in a minute, that aren't married and have children but want to claim that for their taxes. And then we also have qualifying widowers. So you want to think about which one you're going to end up filing using when you report your taxes. Then there's dependents. So dependents are people you're taking care of, right? Generally, we think of it as children or qualifying elderly, right? Elder people that you take care of. It could be a parent that is older and you care for and you and you take care of them. So that could be considered a dependent. And then lastly, there are deductions and withholdings. So these are things that are taken from, deductions are items that are removed from your taxable income and lower the amount of tax that you're liable for. Withholdings are similar in that it basically tells whoever's filing your paycheck or helping you take the taxes out of your pay, tells them how much to subtract from your paycheck, right, to give to the government. So everyone is different, like we mentioned. When you file your tax forms, they give you a long list of deductions. They tell you kind of what things you might be eligible for, and it's up to you to decide which ones your family would qualify for. If you're not sure, you can always talk to a tax professional and they can give you some advice there. Okay, so payroll employees. So when you're filing your taxes, when you start a new job, they're oftentimes going to give you this W-4 form, and this is the federal tax form. So on this, you're going to put your personal information, your Social Security, that filing status we talked about earlier, and then it's going to ask you to enter some of those withholdings and deductions and calculate that for you. So it'll ask you if you're working multiple jobs, if you have any dependents, or children or elderly you're taking care of. And all of that information is used to determine how much to take out of your paycheck. In addition to this federal form, you might get a state form and even a city form. For example, I know in New York City, there's a state tax form. There's also a New York City tax form you have to fill out because there are city taxes. If when you start your job, you're curious to know what your tax rate might be and what they're going to take from your paycheck, you can go to this website and it'll ask you to enter how much money you're earning. It'll ask how much, where you live, and it'll give you an estimate of how much you'll expect to get out of your paycheck. Lastly, when you're at the end of the year, your employer is going to give you something called the W-2, right? So W-4, this is how I try to remember it. W-4 form is before you start working. W-2 is to pay your taxes, to file your taxes. Whatever you want to remember it, whatever is easiest for you. But basically, the W-2 form is given to you at the end of the year by your employer, and it lists all the income you made and all the taxes you paid. So when you go to file your taxes at the end of the year, you're going to need that form because it's going to tell your tax preparer how much you actually paid. So let's look at a quick pay stub. So this is an example of a pay stub. We have the pay period up at the top. We have your earnings right over here, right? So you might have earned $16 an hour for 40 hours a week. Got a little bit of overtime, which is great. Overtime's awesome. And then here it has a breakdown of some taxes. So we used New York as an example. So as you see here, they took out federal income tax, state income tax, Social Security, Medicare, and then family leave and New York State disability insurance. So these are more state and local taxes that apply maybe only to New York State. So total out of your paycheck that you're paying towards taxes is $146.39. So it's a reasonable amount that they're taking out. Then we have over here like other deductions. So this person has benefits. So they have these other benefits. So if you're interested in learning more about like reading your pay stub in depth, we do have another video to help go through this in more detail. So here we have the total, right? You have your earnings, your gross earnings, 760. Your taxes come out of 146.39, and then your other deductions 125. So this person's only taking home 488.61. So just wanted to point this out because it's really important. When you're making a budget, you want to differentiate between these amounts. So your gross income is the income you make before your taxes, while your net income is the actual money you're taking home. So when you're making a budget for your family, you'll want to look at that net income, the money that you're actually going to get in your hands. And that's the actual money you'll have to spend towards your expenses. So again, you can go back to that tax calculator. We'll put the calculator link in the notes and comment section of this video for you. And that's what can help you plan around what you're going to be taking home and plan around what income you're going to have to be able to use towards your family and household expenses. So let's talk a little bit about being if you're self-employed. So when we say self-employed, we mean you're not being paid by a company through a payroll service, right? People that are paid directly through a company through payroll, they get a nice pay stub that we just showed you on the last few slides. So this one, you are going to have to report your taxes yourself. You're going to have to keep track of what you make. Your employer is not taking taxes out for you. So oftentimes we see this if you're a contractor, right? If you're only working temporarily for a company, if you're a business owner, if you have a gig job, and by gig job we mean, you get paid based on the activity you're doing for each activity you do. So if you work Uber or Lyft or DoorDash or Amazon Fresh or TaskRabbit, whatever you're doing, all those jobs where you're getting paid by each service, you're going to want to keep track of the income and the profit you're making because it's your responsibility then to report that and pay taxes out of that income. So there's lots of ways to keep track of it. right? You could just write it down on a piece of paper. You can keep a spreadsheet or something online. If you want some resources on how to track that, you could also meet with one of our financial coaches, and they'll give you some tools you can use to keep track of everything. You'll also want to keep track of some deductions. So for each type of business, there's different deductions or things you could subtract from the total tax amount you owe. And it differs based on your business. So again, if you need guidance on this, you could talk to a coach, you could talk to a small business counselor, or you could talk to a tax professional for help with that. And you could also, again, estimate your taxes just so you know as you go. So we recommend, you take the income, you estimate, okay, I made this much amount of money, put it in the tax calculator, and it'll tell you, based on this, you're probably going to need to pay this amount. So you can actually pay your business taxes as you go. You can pay it quarterly. You can, and this is the calendar. They're due January 15th, June 15th, September 15th, and April 15th. So basically what you can end up doing is you can calculate and pay before the quarter ends. And then that way you won't have to pay all of it at one time at the end of the year. It depends on your preference. I know personally, I would prefer to pay it slowly over time instead of having to keep that big lump sum of money apart and paying it later. It really depends on your financial management style. But again, you want to put that money that you have to pay for taxes somewhere where you're not going to touch it, right? So if you want to open a savings account or a separate checking account so that you're not touching that money and it's ready for tax season, whatever you got to do so that you're not owing money to the government later, and so that you have the money to pay them back. So to do it, you can actually do it online. It's really easy to pay these taxes quarterly. It's the 1040-ES form online, and the IRS has an easy portal for you to pay. Also to keep in mind is if you're a contractor or business owner, you likely get a 1099 form at the end of the year, which reports all of the earnings as well. So for any questions on this, like we mentioned, talk to a financial coach, talk to a tax professional, or if you have a small business, we can share some small business resources. There are some great community navigator resources that we can share also in the comment section or the note section of this video. Okay, so let's just do a quick example because we get a lot of questions. If you're an Uber, Lyft, DoorDash, if you're using your car for income, there's a lot of questions we get on this. So some common deductions, if you're using your car for income, are one, vehicle expenses. That's mileage and usually tolls or parking, right? So when we talk about mileage, we're talking about mileage for your job, not for personal use. So you have to make sure you're keeping that separate. So if you do a few rides for somebody, then you have to take a break and pick up your children for school. That driving you're doing for picking up your children does not count towards this mileage. Similar for commute. Like let's say you are driving for your first ride to get to a certain spot, or you're driving to get to work, doesn't count in the mileage. So you right now for 2022, the mileage multipliers, you'll multiply the mileage you're driving for work by 0.585. This is a deduction. Then if you have to pay any tolls or parking, that's also a deduction. The other expense that can be taken out of the taxes that you owe are operating expenses. So this could be things like, your phone, right? If you need your phone for GPS, you can't deduct your whole phone. It'll be a percentage, but thinking about your phone plan, if you have to buy a mobile data plan or internet plan to be able to use it anywhere, cleaning supplies, mats, if you have water bottles and other things in the car for customers, those are all operating expenses. And so you want to keep receipts of that and make sure that you're including that in your deductions. I think the best advice that for if you're driving for income is to stay organized, right? and to talk to somebody if you have questions. So you can use an app if you're good at using apps or using the computer. These are a few apps you could use to calculate mileage and your other deductions along the way. You could also use a spreadsheet or keep a written record. You could technically print out a piece of paper like this one below, the mileage and deduction log. You're welcome to use this. And every day, keep that, or every week, fill that out. Keep that so that when you do your taxes, either quarterly at the end of the year, you have a really good organized record. You could also do it in a notebook. It's really up to you, but can't emphasize enough how important it is to keep track of everything, because you want to make sure you're paying an accurate amount for your taxes. So now that you've been like filing your taxes and paying your taxes throughout the year, now we're going to talk about filing at the end of the year, or submitting your tax return. So when you file your taxes at the end of the year, basically the IRS is looking at all the income you made, looking at the taxes you already paid, and deciding whether or not you paid the right amount, right? And so they do this between January and April, about mid-April every year, and you file it with the IRS. You may end up paying money to if the IRS determines actually you didn't pay enough money, or if the state says, I don't think you paid enough in taxes, you might owe them money. And that's why we said it's important to try and pay throughout the year and be as accurate as possible, because ideally you don't want to have to pay any money extra money to them. You might also get money back. So that's a benefit too of doing taxes. You might overpay. So what I usually say is, I think many people choose to pay a little bit more in taxes throughout the year so that they get a nice check at the end of the year when they do their taxes to say, here, you paid too much. Here's a nice check for you. Tax refunds and credits. So a credit reduces the amount of taxes you owe. So there's a few credits we'll go over on the next slide about the two most common credits that you might know, but basically it's saying because of these qualifying factors, you're going to pay a little bit less in your taxes. There's also what we mentioned earlier, a refund. So that's just money back for paying too much in taxes. So usually when you file, you're going to end up filing both for the federal government and the state. So you might get a little bit of money from both. And it's always nice to get a check that you can use for some of your goals. We always say tax refund season is a perfect time to use that money and put it aside towards something you've been saving up for. Whether you're thinking about saving up towards education or school for your children, you could take that check and put it straight there. Whether you've been saving for a repair to your car, or you're saving up for a home, this refund check, it's always good to make a goal for it and to put it aside and put it towards something you're striving towards. And then we have the stimulus payment. So the stimulus payment was something that was dispersed from the government in 2020 and 2021. And these were meant to be assistance for low-income families, low to moderate income families during COVID. So there is no stimulus. So far, there's been no stimulus check dispersed this year in 2022. So just as a note, probably won't apply as much for you at this point, but just know that that's what the goal of the payment was for. So back to those tax credits. So the two most common credits are the Earned Income Tax Credit and the Child Care Tax Credit. So the Earned Income Tax Credit is basically a reduction in your taxes for low-income families. So to be eligible, the family has to, if you're a single person, you have to have made less than $75,000 in the year. And for married, it's less than $150,000. You have to have been in the U.S. So there's a presence test. You have to have been in the U.S. for a certain amount of time, and you have to file your taxes. That's how you get the credit. Once you file your taxes, they let you know and they'll reduce that there. The next one is the child care tax credit or the child tax credit. So this is a reduction for taxes for low-income families with children, with qualifying children. So income again is below 75,000 for single and 150,000 for married married couples. To be a qualifying child, the child has to be under 18. They have to live with you for at least half the year. You have to be paying for their expenses. There are a few more requirements for the qualifying child. So, what I would recommend is before tax season comes along, we'll likely do another workshop on that. So stay tuned, and we'll talk about who's eligible for this. Similar to the earned income tax credit, you have to be present in the U.S. for a certain amount of time. So in most cases, if you've been present in the U.S. since January and you're here most of the year, you're good. But again, if you have questions on that, we have more info on our website too that you could check out at safe-irc.org. So you'll also have to file your taxes. So the credit was previously $2,000 per child. And again, something to keep in mind is that, these credits are something that are approved by the government, by Congress. And so right now, this is what it looks like. We're in June 2022. It could change the requirements. So if there are changes, we'll make sure to update everybody on that. But just keep in mind that some of this info might change if there are changes in the laws surrounding these credits. So how to file your taxes, right? So there's a lot of different resources for you to file your taxes. So there are free tax preparation sites. So when January comes along, you're going to see a lot of postings, probably from the organizations you're working with or in your community about free tax prep. So they do it either in person or they could do it virtually, over the phone, over Zoom, whatever is easiest for you. IRC actually does a free tax prep program, so keep on the lookout for that next year. And there are other organizations that offer it throughout the country. You could also do it yourself online if you feel like you don't have complicated taxes, or maybe you have a lot of finance knowledge, you're an accountant, or you just want to try it out yourself. You could go online. IRS has a list of the free file sites. The cool thing about a lot of these too is sometimes they have like a phone number you can call in if you're stuck on something. But again, if you're not comfortable doing that, you can go to free tax prep service, or you could even go to a paid professional. So ideally, the free tax prep services are best for people that have like simple taxes, right? You worked, you had a single job, you have your W-2, or you have your family's information. But if you're working, a small business or contract or consultant, or have a lot of investments, or it's probably better for you to go to a paid professional like an accountant, or somewhere like H&R Block, because they might be more equipped to handle your tax questions. So what documents to bring when you do your taxes? So you're going to have to bring a lot of things with you. So what I would say is once you make your tax appointment, put together everything. And the more organized you are, the easier it's going to be for that person helping you file. Or if you're doing it yourself, the easier your life's going to be when you do it. So you'll need social security cards for everybody, or tax ID numbers if you don't have a social security card. You'll need the photo IDs generally. You'll need your income and tax documents. So if you're a payroll employee, that W-2, the one you get at the end of the year with all the info on it, you're going to need that. If you're self-employed, you're going to need that 1099, right? That document that you get with that lists all the income on it. If you're self-employed, we're going to bring that and fill it out. Your other income sources. Oops. So if you worked other jobs, bring that. If you have cash and you calculated that, bring that. If there's anything you have for deductions, like receipts and things, bring that. Another thing to think about, like if you get unemployment benefits, bring that. Social Security benefits, bring that. So you just basically want to bring any documents about your income. So what I recommend is throughout the year, keeping a folder, or something where you can store all these documents throughout the year. So they're not floating around your house or your apartment and you're scrambling to find them at the end of the year. Additionally, if you're not filing single and you're filing for your spouse or your children and dependents, you're going to have to bring the Social Security, the photo ID, and all that for everybody. So just keep that in mind. And then you want to bring your bank account info. So they could do direct deposit, which makes your life very easy. If you don't, if you've had issues with your mail, then bring your bank account info and they'll direct deposit your refund to you directly. Okay. And so now we talked about how to file your taxes, paying taxes throughout the year, what taxes are. We just wanted to mention one more thing as part of this presentation, and that is tax scams. So there's a lot of scams out there. Scams are basically fake calls or fake inquiries to try and trick you out of your money. Is basically what it comes down. Trick you out of your money or your information. So what you'll see is when it's tax season, these scammers are calling, emailing, texting all the time, right? They're working hard because they're trying to trick people. They think people know it's tax season. If you get a call from IRS, they might think it's real. So just so you to know, IRS will never call you. They don't do that. They're not going to email you and they're not going to text you. So if you get a call, email, or text, it's likely not real, right? They'll usually send you a letter in the mail. And IRS has on their website, they list out all the scams that they're aware of. So you can even cross-check it. So commonly to spot a scam, they'll usually demand immediate payment. So for example, they'll call and say, "Hi, this is the IRS and you owe $500 for your tax return. What is your bank account number? And we will fix this right away." Nope, that's a scam. They're never going to ask you to pay right now on the phone, right? They'll demand immediate payment. Or sometimes they'll have a prize or reward. So if you see this picture on the bottom, this person got an email saying, "Your economic impact payment is available. Click here to claim my payment." So it's like a reward. Oh, I have a payment that's due to me? Great. Let me click this. I'd love to get free money. It's not real. They're not going to send it to you that way. So they might also ask for your Social Security number, ask for your credit card or bank account information. Don't give it to them. And then lastly, a common thing that we see is that they might threaten to alert the police. And sometimes, these calls can be pretty scary, but again, you can always say, "I appreciate you calling. I'm going to check up on this." Hang up, right? You don't need to talk to these people, and don't worry about the police. The police are not going to come after you for not paying your taxes. At least, probably not. They definitely won't come after you for paying your taxes. So don't worry about that. Sorry. And so what to do? So if you get one of these calls or if you get an email like this, don't click the link. If you get a text message and it says, "To view your tax return, click here," don't click it. They have ways to get your information if you click that way. When in doubt, you can call the IRS. So if you're not sure, if you're like, "Maybe I do owe money and I don't know," you can call the IRS. You can actually check online too to see if you owe any money. And so I would recommend, hanging up and checking, double checking the information before you let them, before you give them anything. You can ignore it. You could delete it. I recommend deleting them, block the number, and then you can also report to IRS. So if you're getting scam calls, it helps the IRS let people know what kinds of scams are out there. You can call this number and let them know who's scamming. So now that we've learned, let's talk about what we've learned today. So we learned a little bit about what taxes look like in the US, right? What are some different types of taxes, what they pay for. We talked about how taxes are collected, as a payroll employee, as someone that might be self-employed or have their own business. Then we learned how to plan for your taxes, how to file your tax return at the end of the year, and learned a little bit about tax benefits, tax credits, and how to keep on the lookout for tax scams. So thank you so much for joining our presentation. If you want to continue learning continue learning with us, we have additional financial education classes on our website at safeirc.org. We have some live classes that are coming up. We have recorded videos. And you can also, if you want to meet with a financial coach to talk about anything that you learned about today or other topics, you can email us at safe.project@rescue.org or send us a WhatsApp, text message, or a voice note. But yeah, thank you so much for joining, and we appreciate your time. Take care.